Remember the traditional 60% stocks, 40% bonds asset allocation? Well, forget about it. It just doesn't work, says CMG Capital CEO Steve Blumenthal. He's here to tell us why. Welcome, Steve. All right, tell me, what's wrong with 60-40?
Well, we're in an environment where dividend yields are very low, where interest rates are very low. And if you look back historically, last 14 decades, there's a pretty accurate way to determine what the forward return stream will be. It's roughly 4.26%, which is the lowest forward projected return stream in the last 14 decades.
And what you prefer is a 33, 33, 34 strategy. Tell me about that.
Well, let's say we're talking buckets here. So the first 33 are equities. You need to have long-term equity exposure in the portfolio. There are just times that you need that exposure. The other 33 fixed income, need to be very cautious there. Yields are so, the interest rates are so low. And in the last bucket, the 34, we're talking tactical trading, alternative types of strategies.
Fun stuff. All right, let's go bucket by bucket. What do you want in that equities bucket? It seems like you like mutual funds, maybe some from Vanguard.
If you have a mutual fund that gives some additional return, a real solid manager on the equity side, that's great. Otherwise, beta is free. This market return is free, and Vanguard's ETFs are a very low-cost way to get exposure to equities.
And in the bond bucket, tell me what you like there, because people are worried about a bond bubble.
I think there is a bond bubble. In fact, I think that the next 2, 3, 4 years, we're going to see inflation like we haven't seen before, and interest rates are going to have to unwind and head higher. That's not a good environment for bonds. So, and at 2%, if I'm wrong, inflation is still outpacing 2%. It's a negative return as it is. So shorter term, be patient, wait for higher yields to reset, or think tactical. There's a number of fixed income strategies that you can do that are tactical and can add that fixed income return.
So like, what do you like, high yield or corporate bonds, foreign bonds? Exactly what's in that bucket?
I like high yield, but I like it risk managed, emerging funds, bond funds, but also careful risk managed, and then stay short term with some of the exposure.
All right, now let's talk about that fund bucket, that last 34%. This is in alternatives. Things like shorting the yen. Now this just isn't for anybody, because this trade hurt a lot of people. It's working recently, but it hurt a lot of people for a long time. They even called it the widowmaker.
I hear that and understand it. Well, think in terms of sizing a portfolio. You're taking multiple different risks. So each is a different bet. And it's how you size it, how much exposure. For example, gold. I think gold is a great play because I believe there's a currency war going on. I think that that's going to continue. All the major countries are doing everything to inflate as much as they possibly can. And we're debasing fiat currencies. So gold is a nice inflation type of hedge. I think it's important. Well, that's also a risky bet. So you size it in the portfolio. Maybe it's a 10%er. The short on the yen that I recommended in my piece.
10% of that alternatives bucket.
So I would say 10% max of the total portfolio exposure, but I wouldn't want to be 10% of my 34% in the alternative bucket to just one thing.
Got it.
So, but there are a number of, the way the world has evolved with ETFs, inverse types of ETFs, mutual funds in the alternative space. It used to be the land for Harvard and Yale and super rich people. Now there are a number of liquid alternatives that are either tactical in their trading strategies or, for example, I mentioned currencies. Well, there's a great currency manager we've known for years available in a fund type of structure. That might be a 5%er. So these sorts of things, the idea is to find return streams that can make money in up or down market environments. So if we're looking at 4.2 some odd percent in a 60-40 mix, we're looking to enhance that return stream by adding things that can make and drive return.
33, 33, 34. Sounds good to me.
I think it's a good balance.
Thanks a lot for coming on.
Thank you so much for having me.
Thank you for watching The Street.